Welcome to America, the greatest country on earth where the American dream is to own your own home. In this video, we're going to talk about the 4 steps that you need to take in order to make sure that you could qualify for a mortgage. Hi everyone, Oleg Tkach here with NFM Lending, and I have been a mortgage lender for the last 18 years. Recently, there have been a ton of people that have been immigrating over here, refugees from Europe, Ukraine, Russia, other countries, and we've been getting a lot of calls as a team as to how do we buy a home, what do we need to do here. We have questions about income, we have questions about credit, and people have been reaching out as they've been hearing different things from friends, family. In this video, what we want to do is make sure that you understand the 4 different things that you have to take care of if you want to achieve home ownership and provide clarity on income, credit, immigration, and on assets. So the first step that you have to do is you have to take care of your immigration status here. And what we like to tell people is you have to apply for an employment authorization document known as an EAD card. It's also known as an I-765. It's pretty much the same thing, but you have to basically get an official document that gives you authorization to work in the United States. That's extremely important for us to be able to accept your income. Now, asylum status, we get this brought up to us all the time as well. Asylum status, you're eligible if you have a approval of an I-589 or an approval of an I-730 and a completed I-94 arrival departure record. An approval of an I-589 or an I-730 and a completed I-94 departure record is required with your asylum, and you still do need your Social Security card and an employment authorization document. If you have a non-working visa, anything that doesn't allow you to work, you're not eligible. Just keep that in mind, that status automatically you're not going to be eligible because we can't prove that you can work in the United States. One thing we always tell people is once you get your status documents in order, you must apply for a Social Security card. And you could apply for a Social Security card and we're going to have the link listed here, but you have to get a Social Security number, which will allow you to also get credit, which we're going to talk about later on. There's a ton of different visas out there. There's so many of them. There's way too many of them for us to list. And so if we didn't go over that with you, or if you have further questions, reach out to us about the specific visa that you have. We have a chart of, I think there's like close to 100 different visa statuses, and you could reach out to us and we'll let you know if that one is eligible or if it's not. Lastly, if you're a spouse of a U.S. citizen, so you came over here as somebody that married a U.S. citizen, you arrived on a IR1 or a CR1 or a CT6 visa. Okay, so if you know what those are, you could use that to qualify for a mortgage. So overall, the biggest thing you have to think about is, does my status allow me to work in the U.S.? If the answer is no, then you know for sure you're not going to be eligible. If the answer is yes, what type is it? If it's one of the ones we mentioned, it will work. If it's not, it doesn't mean it's not going to work. Reach out to us. Again, there's so many of them different out there, and we will tell you if you are eligible or if you're not eligible. Once you have the first step in order, the second thing that you have to really focus on is credit, building a credit score. Now, the easiest way to build yourself a credit score is to open a secured credit card or a few secured credit cards. So what is a secured credit card? A secured credit card is when you go to your local bank, let's just say, for example, Bank of America. You go there and you say, I want to open up a credit card. Well, normally, if you have no credit whatsoever, no one will give you a credit card. So the way a secured credit card works is you give them an amount. They say, okay, well, what do you want as far as the amount of the credit card? You say, let's say you say $300. You give them $300. They take your $300 and they essentially give you a credit card for $300 because now you've secured that credit line. Then at that point, you will receive the card in the mail, you start using it. My suggestion is use it once a month and pay it once a month. Don't max it out, meaning don't use the full amount of it. What I always like to suggest to people is fill up with gas once a month with it. And then when the bill comes, pay it off, pay it to zero. Once you've paid it off to zero, use it again once a month from that point moving forward. If you do this, and I would suggest having 2 or 3 of them. I would also suggest if you're married, having them be joint credit cards so that way they don't just help you, but they help your spouse. Usually within 3 to 6 months, you will have a credit score, and because you're paying it off every single month, you should have a pretty good credit score, which that will take care of the credit portion and allow you to qualify based on credit. Next, you have to think about income. That's a big part to qualifying, but it isn't just having income, it's having a good enough income that allows you to qualify for what you want. You have to think about it this way. When a bank determines how much you qualify for, they look at what is your monthly income. Let's just say your monthly income is $5,000 a month. Then they say, okay, well, based on a $5,000 a month income, your maximum monthly payments, including cars, credit cards, anything you see on credit, plus your mortgage, cannot exceed 50% of that, 49.99 to be exact. Therefore, if you make $5,000 a month, the maximum mortgage payment that you could qualify for is $2,500 a month, assuming you don't have any debt. If you make $10,000 a month, the maximum mortgage payment you could qualify for is $10,000 or $5,000 a month, half of that $10,000 income. So with that said, what income types are acceptable? Because this is where a lot of people get it wrong. People will call us and say, I just opened up my own company, I'm self-employed, I make this much per month, can I buy a home? Here's what you have to remember. Banks look at a 2-year work history. It's super important that you could have a 2-year work history. So if you want to become self-employed, great, become self-employed, open up your own business, but no, you have to have 2 years of tax returns that show self-employment earnings if we're only going off of your tax returns and you're self-employed. Now, keep in mind, when you're self-employed, your write-offs and how much you end up making, not gross is how much money you make before you write everything off. Your net income is after you write everything off. A lot of people that are self-employed, they write everything off and their income ends up being almost nothing, and then they want to get a loan, and then they realize that they don't have any income to show because everything is written off, all their expenses and everything else. Therefore, you have to keep in mind, your net income is what matters. So let's just say you make $100,000 a year and you write off $25,000 in expenses, your net income is $75,000. That $75,000 is going to be used to calculate income, not the $100,000 gross that you made as a self-employed borrower. So when you're self-employed, you got to remember, 2 years of being self-employed. Your net income is what matters. Once you have that, then your income will help you qualify. Now, the next part is a W-2 employee. W-2 employee is way easier to get a loan. Why? Because your full income is counted. That's one. The second reason why is because we could use history from the country that you came from to establish that 2-year history that's needed. So therefore, if you're trying to buy a home as soon as possible, becoming a W-2 employee is super important. So let's say you're a W-2 employee and you've worked here for 1 year as a W-2 employee. And let's just say you worked for 1 year in the, let's just say the construction industry as a painter. And we could document that you in your country also worked at a company as a painter as well in the same field. We could use that as history to tie the total 2-year history together and allow you to qualify without waiting a full 2 years in America and having a history here in America. We've done that. Now, some people ask us about cosigners. What if we don't have income, but we have a cosigner that could cosign? Yes, that is acceptable. after you have your status documents in order, after you have your credit in order, yes, you could add a cosigner. That cosigner's income is what's going to help you qualify. Now, one thing to keep in mind as a cosigner is their income has to be pretty large, considering they're going to be qualifying not just off their current debt, their home payment, if they have car payments and so forth, but also your new payment as well. The same 50% rule applies, and in that 50% of the income that could be allowed towards a payment, housing payment, it takes into consideration everybody's debt. Their debt as the cosigner, and your debt as the new home buyer. So a lot of people do have relatives, or I should say some people have relatives that have extremely good income. They co-sign for them, and then they don't have to worry about the employment piece. They could be self-employed for a few months, their income is not counted, but the co-signer has such strong income that it allows them to qualify. Income is probably the biggest part that most people don't understand when purchasing a home, where if you don't have your income in order, or everything is written off on your taxes, no matter what, no one really could help you get a mortgage. So income is super important. For more details, for more specifics, call us. We'll go into detail about income with you. Now, the fourth part that you have to take care of is the down payment. And the first thing that I want to say about down payment that most people that came here have it wrong is cash. You cannot use cash for a down payment. Specifically, even if you just deposit it into your account, you can't use it right away. So if you do have cash, you want to deposit it immediately into your account, and it has to sit there for a minimum of 2 months, and then you could use it for the down payment. Then you could apply for a loan. So if you have cash, get it into your account as soon as possible. That way it's sitting there while you're taking care of all these other items. Now, as far as down payment minimums, you don't necessarily have to have a down payment. There are programs out there that help you with your down payment assistance programs. Let's say that, how else do people buy? Well, there are people that get gifts for the down payment from their relatives, where their relatives will gift them, 5%, 10%, 20% down. Now, why 20% down? You've probably been hearing, people mention 20% down, 20% down. The reason why 20% down is kind of a standard in buying a home that a lot of people talk about is because when you put 20% down, you don't have to pay mortgage insurance. Mortgage insurance is a special insurance that the bank requires you to get if you do less than 20% down, which is an additional cost to your monthly payment that protects them just in case you don't pay your mortgage. So that's why a lot of people say do 20% down. Is it required? No. If you have cash, deposit it immediately. If you have relatives that are willing to gift you money, you could do that too. Let's just say that you had cash, but you couldn't use the cash, and a relative was willing to gift you money. That's something that a lot of people do as well. So just keep in mind, the biggest thing is cash. Otherwise, down payment isn't necessarily required. That's why it's the fourth part, because it's not important unless you're trying to use cash. If you have any further questions, reach out. We could go into more specifics as well about different down payment scenarios that you have. So there you have it. Those are the 4 things that you must take care of if you want to purchase a home. Now, we have had people reach out to us, and they've had questions that were like, is there any programs out there just because we came here, we're refugees, that will allow us to buy a home without any of this? And the answer is no, that does not exist. You must take care of these 4 different items if you want to purchase a home. Once you do, then at that point you'll be able to qualify. Now, how long does it take is the next question that a lot of people ask. We've had people as little as 6 months in America purchase a home as they took care of all these items quickly. They were W-2 employees. They had income that we could show from their country that we were able to tie in, and we got it to work. There's other people that's going to take them years, maybe because they can't provide one of the items. Maybe it's because they take way too long to build credit, or they become self-employed and write everything off, and by the time they figure that out. So it really depends on you how fast you could purchase a home. It depends on your scenario.
We also created a reference guide that goes into this more specifically as well. If you weren't provided it, reach out to us. We'll provide it to you. And in addition, there's obviously a lot more questions that you guys are going to have. We do speak a few different languages, including Russian, Ukrainian, Moldovan. And so reach out to us with questions. We're here to help. And I hope that this video gets you on your path to home ownership.